Hey there, thanks for tuning in. Welcome to Investing in Germany. And today I want to talk about Meta Platform. So Meta Platform or the Facebook is one of my biggest portion of my portfolio. About 25% of my investment is with this Meta Platform. And therefore this video could be more biased. And I'm also not a financial advisor. So let's have the disclaimer into the side. And then today I want to really look at what's happening in the Meta Platform stock price, because the recently last couple of months, I would say, the stock price has gone up and down quite significantly, and there's a lot of volatility in the market. And there are also several positive news coming in the market where the stock price has really skyrocketed recently. And therefore, it's now time also to have a look at my portfolio and also look at the Meta Platform to see whether I would buy or sell or even hold. So it's a time to have a look. And Meta Platform also released their Q1 results. So it's a really good time, I would say, to go ahead and have a look at the overall performance of the Meta Platform. Let's quickly start with what's happening with the stock price. As you can see that the Meta Platform, it's the last 5 years view. We can see that it reached its peak at around September 2021 and then came to its knees or to the bottom at around November 2022. You can see that within about a year, about 76% of the net worth has come down. So it just says how much volatility it has. And I was actually starting to invest and accumulate right from 285 euros or something like that, around $300. And then I was adding it quite heavily when it was going down up to 794, 93 euros. So I was keep on adding. So the main motive here was that the Facebook has a really good stickiness for its customers, and also the Instagram and Reels and WhatsApp, everything was more sticky. And what I was seeing around me and even myself, I am really more into the Facebook and also WhatsApp. So it's not going to go away anytime soon. And the market was really not happy with the way of capital allocation in Facebook. So what happened here is that Mark Zuckerberg came and said that he's going to invest like around $30 billion per year on metaverse, and he did not provide any sort of business case to the market. So he said that in 10 years, metaverse is going to be quite heavy, and he wants to make sure that Facebook or the metaverse or Meta Platform is in the metaverse, and therefore he's investing in for the next 10 years. And then nobody had really any clue what's going to come in 10 years. And as you know, all the analysts and the Wall Street is really focusing only on quarter to quarter basis, or even maybe 1 year or 2 years is quite far away for them. And 10 years is really, really far away for them. So nobody lacked in the Wall Street. And you can see that the stock price came down like 76% within a year or around a year. So this was also one of the reasons why I also invested, because when there is a lot of fear in the market, I started to invest more into metaverse or into the Meta Platform. So that is one of the reasons. And then what happened really now is that you can see from November to 2022 to now, the stock price has gone up like 164%. Like it's really, really crazy volatility and crazy appreciation within a very small, like 6 months around about that. So it's a really good positive trend here going on for the Meta Platform. And therefore, the question is it really worth still to go on invest in? Because now the tide has gone in the opposite direction, and everything is now really good for Meta Platform. So we should have a look at what's happening over there. So what really happened here at the background is that Mark Zuckerberg, from I think around November, December, he came out and said that all the 30 billion is not going to go towards the metaverse, and they're going to give some money to its current businesses, and some 1/3 of money going into AR and VR, the augmented reality and virtual reality. And then only 1/3 is going into the research and development for the metaverse. So there was some clarity given into this $30 billion. And market was really okay to see, okay, it's only 1/3 is going towards the unknown metaverse. So there was some good positive trend coming in. And then he's changed the whole narrative of his quarterly report into efficiency, and also towards the AI, the artificial intelligence. So he stopped talking more about metaverse, because the more he talks about the metaverse, the more the Wall Street was punishing the stock price, and it was not helping him, because Facebook is really using the Facebook shares as a cash, and they are giving a lot of stock-based compensation and so on. It is really hurting him, and therefore he change the whole narrative into the artificial intelligence and also towards the efficiency. So 2023 is the year of efficiency for Mark Zuckerberg, where then he started laying off a lot of people, like in 10,000 people, 12,000 people. And there is also one more layoff coming in May 2023. So he's really pushing or really squeezing out those dead weights and extra weight and making it really lean towards the profitability coming in for the next couple of years, when we know that advertising market is not going to do really well for the next couple of years, at least for the next year, because of the recession and also high inflation and so on and so forth. So this is the idea here. And as soon as Mark Zuckerberg came and said that he's going to go a lot into the generative AI, where you can write a text and then it creates a picture for you, the AI creates a picture for you and so on. That is something the market really liked, because the chat GPT came in, and then we have the Google and Microsoft really pushing towards generative AI, and then Meta platform coming in and saying the same story, and Wall Street was really happy to see it. And you can see that the stock price has really gone up really good. It's going to be almost a multi-bagger in a couple of months. Maybe I would say that maybe until November, maybe it goes up to 200% from its below bottom. So that's not quite far distant from here, but anything could happen. It can go again another 75% from now downwards. So nobody knows what really is happening on the market, how the market will react and so on. But then we are talking about the business. So let's quickly go ahead and look only from the business point of view. So let's quickly have a look at what's happening in the quarterly report from the metaverse now. So this is the earnings presentation for the Q1 2023. What you can see here already is that here the revenue is coming down. So this is the revenue by user geography. It has come down from 32,000 to 28,000. So it's answerable, because the Q4 2022 is the festival season in the all over the world. We have the Christmas, we have the New Year. There's a lot of gifts articles sent around the world, and therefore there are a lot of actions going on in the advertisement market. So everybody wants to sell their products, and there's a lot of advertisement market Q4 of any year, right? So therefore it's understandable the Q1 is sort of, let's say, a mild year for almost all the business around the world, because after the heavy spending from the consumer in the end of the year, and the consumer starts to save some money, and then save some money for the next spending season, right? It's okay, I would say. But if you want to look here from the annual basis, you can see that Q1 2021 26,000, then 27,000, then 28,000. So there's a small marginal increase in the revenue, I would say. And it's okay, because I believe that they are not gaining it from the market share. I would say they are gaining it from the increase in pricing. And therefore, I would say that that's not a lot of much of volume generation here going on, because we know how the market is at the moment. So, but anyways, they are showing the positive trend. That's really good to see here at this really strong or really depressed situation in the market at the moment. As everybody knows, US and Canada is the money generation for them, which is cash cow, and then followed by Europe, Asia, and rest of the world. I would say the first two is the most predominant in the net income perspective for the metaverse. So from the segment result, you can see that Reality Labs is not doing that great here, and even on a year-on-year basis, it's gone down significantly, and also quarter-on-quarter basis, it's gone down significantly. And I don't think that Reality Labs, which is the maker of this Quest or the Oculus, this VR and AR headset, what they are developing and investing quite heavily, I don't think it will make a lot of money for them in the near future. But then they are really pricing it or placing the product in the market to be more in the league of Apple, because Apple is also coming up closely. It's as a rumor coming up that Apple is going to come up with an VR or multi-reality or something like that product in the market. So there is a real competition going on. I would say that there will be a fierce competition in this segment for the metaverse for sure, with coming in from the Apple and maybe even Samsung or Google. So I think everybody will come into this market in a couple of years time, when everybody sees a profit here. And I'm not expecting a lot of positivity going on for the Reality Labs at the moment. What's really also significantly very bad, I would say, is that the loss from the Reality Lab is also staggering, and we know that they're not creating a lot of products, and they're not really profitable. And Reality Labs is something for the next 10 years or something like that. And therefore, I would say that they will keep on burning cash. And about 4 billion, I would say they should try to limit it to 2.5 to 3 billion per year run rate of loss, so that it's more or less stagnating there from the loss perspective. So yeah, let's see how it really goes on from here on. So yeah, advertising market is really going well here. Even Q1 and year-on-year basis, it has gone really well. But then the loss is also increasing for the Reality Lab. And from the expense, from the percentage revenue, you can see that R&D is a big chunk. 33% of the revenue generated is going into the R&D. So they are investing in the current products like Reels and Facebook and Instagram. And they're also investing in the reality, the virtual and augmented reality, as I said before, and also in the metaverse. So there's a lot of investment going on. If you look at the past, they were hovering around 22, 25, 26%, but then now they are going ahead towards 30, 33% of the revenue. So if they can control it and bring it down to 20% or something like that, that would be really good. But then we have a commitment from the Mark Zuckerberg that he is going to spend 30 billion on a yearly run rate until for the next 10 years. So this is not going to come down anytime soon. So therefore we have to see how it really progresses from the revenue side going ahead from here on. So tax rate is relevant for me, and you can see the net income, they have come up significantly, even though they have increased their revenue only by 3%. The net income has come up like around 10%. So one of the main reason here is because of the cost cutting that they have been doing since the last quarter of last year. So they, let alone like 12,000 people around. And then again, there is another layoff coming in May 2023. So those layoffs are really bringing it into the net income here. And they also took a lot of hit in the profit and loss statement for canceling the contract of the office buildings and so on. So there's a lot of actions done in the last quarter, which you can see here. It's really materializing here. So I would say the net income would again go up this year because of the next layoff, and then also consolidating all the expenses and the capex, and they are doing currently. So I would expect that the net income keeps on inching up and up, and I would say this year should be better than the last year. But we have to really wait and watch how it progresses, because nobody knows, and everything is going on in the direction where Wall Street would like to see. That's why you can see the stock price is also going up like significantly in the last couple of months. And you can see diluted earnings per share is 2.2 for the really soft quarter. It's really good, I would say, for the Meta platform at the moment. And capital expenditure, that is one of the biggest topic of Meta platform. So they have increased from $20 billion in 2021 to 32 billion in 2022, and then I would say another 32 or 30 billion in 2023, and this is going to stay flat for next 8 to 10 years. And this is something that market really didn't like. But then now you can see all the business cases that has been elaborated by the Mark Zuckerberg and his team is really bringing up positive news, positive vibes in the market for the Meta platform. What's really interesting for me to see is that how they're able to keep on increasing the daily active user. That is really, really incredible, I would say. 3.02 billion people going into the app and having a look and spending time in the app is something that is incredible. I don't think anybody can ever match this. Even just imagine that you have a shop in a city, and then we have 3 billion people coming into a shop to purchase or to have a look or window shopping, whatever it is. So it's a lot of people coming into the product and then spending time. This is really, really incredible. I would say this is one of the biggest moat, I would say, for Meta platform. And as you can see that it is reaching its saturation 0.3 billion. I would say they cannot keep increasing for the next 10 years or even for the next year or two. Once it starts coming down, I am expecting the Wall Street to punish the Facebook quite heavily, because as you know, Wall Street is going always from the positive bias, and all their model will show that this 3.81 billion or 3 billion will just keep on increasing even though there is no population. So this is Wall Street for you. This is the analyst's job to do, to have a positive mindset when it comes to investing. And therefore, once Facebook reports that there is going to be a dip, or there is a dip in the daily active user, and then Facebook and then all the Wall Street analysts will become really jittery, and then they will start dumping the stock. This is what happens, even though they don't really care about the 2 billion or 3 billion people who are already coming in. So any drop there would be really catastrophic for the Meta platform stock price. I would say that is my expectation or my assumption, and therefore I will wait for that to see what's happening there. So from there, I would like to also go to the Facebook's average revenue per user. You can see that the US and Canada, they are bringing us a lot of money. As you can see that per user, the price has come down. So you can see that the market is really soft for the advertising market, especially in America, due to the recession and all the other funny stuff happening in the market. And it's not only there, almost all the businesses around the world are going down. And this is expected, and I'm also expecting it to further go down for the next couple of quarters, at least for a year or something like that. And once it's keep on going, I don't think the Wall Street is more concerned about this factor, because this is going to be a very short term. What they are really concerned is about the net income and how the capital allocation is going on into the stock price and so on. So as of all, I would say there is not a big development happening since last year and this year, even though the market has appreciated by 167% or something like that. I would say that the business is as usual. There's not much thing happening here, and the Reels is really progressing, how they are monetizing the Reels. So that's a really positive trend going on there, and there is also tailwinds going on for the Reels market as well. So I would say from last year to this year, there's not a much of actions done in the businesses, and I would say that my fair value for the business is still the same, around $20 to $50 around that time. As you can see, now we are about 240, so we are close to that. Whether I'll be selling, buying, or holding, I will not be buying any more of Meta platform for now. If there is going to be another crash, we don't know why, but I would really consider buying it more. But then as of now, I'm just going to stay there, stick around, and see what's progressing for the next couple of quarters, and maybe also exit maybe once everything, all the positive notes comes into the play. So for now, it's a hold for me, and I'm really happy to see the stock price really rebounding a lot. So it's a really good appreciation for me, 21% in 1.5 years. So I'm really happy how the Meta is performed. To be honest, I'm also having a really good soft corner for those businesses which are run by the promoters, because as you can see around the world, as when the biggest companies go down under or struggling, and then you can see the promoters coming into the businesses, and then they are trying to navigate through the uncertainty and then leaving out. So this is a trend that we can see recently. And since now Meta platform is already run by a promoter, Mark Zuckerberg, who is also having the highest voting share, I would say that he will make sure that this Meta platform is on the growth path, even though the investment allocation to the metaverse was not really good of him. So he understands what the business needs, what the Wall Street needs, and how to make the Meta platform stock as a cash. So I think he will do much better for the stock price actions. So I will just wait around, sit tight, and let's see how it progresses. So thanks for watching. See you in the next video.